Hi, this is Graham Bibby on the 10th of October 2014, so 10-10-2014. What a package of numbers that is. Anyway, this is a vitally important update that you should watch, because I'm going to show you what's been the difficulty this year, and it might be because we're in a bit of a turning point in the market for now. And I also want to explain and reiterate to people why this whole strategy is risk adverse, because right now, as subscribers will know, in our Insiders Club FOS we've been 100% cash, and our Insiders Club, which is undervalued superior growth stocks, we are virtually in cash. A couple of stocks have held up, probably going to give sells today. So I'm all about defensive. So this is not aggressive. This is not risk-taking, this is the opposite, because I only buy things in uptrends. And I don't know any other service that provides this. I then monitor every position you've had a buy signal on every day. And I've done market analysis for 30 years, so you get 30 years of experience. I monitor every day, and if the trend reverses, my ego doesn't come into it, my predictions don't come into it, although I don't make those. Anyone's forecasts don't come into it. We buy things because we believe they're going up in the trend, and if they start down in the trend, I don't care how good the fundamentals are, we're out. Sometimes I might get criticized for moving in and out, but I don't care, because it's all about downside risk, and I know that I will consistently outperform the market over any reasonable period. And my key is to limit the downside. So let's start off with the Russell 2000 here, which I was telling you last week was the one that seemed to be leading the market. And I just want to make the chart bigger so you can see this is what's been going on this year. Uptrend here early in the year, early in last year to the mid-January, then reversals in January, which gives me the sell out. Then one-way action into a new high and a new uptrend, only to be reversing from March to May, and then reversing again up to the same point, then reversing again in July, then new uptrend and reversing again. Now some people said to me, isn't this a sign of new market action, people are trading more short term, etc., etc.? But in the 80s, I used to trade a lot of the futures market and commodities market, which is all about short-term trading, all about expert pros monitoring trends. And we do get these periods. Nothing has changed about the markets because it's driven by human psychology. It's also driven by planetary alignments. It's also driven by the laws of vibration and cycles. But right now, we're in a bit of a downtrend. So the S&P, the Russell 2000 broke to new lows, and if we go over here and let's say we look at the S&P, which I just mentioned, you can see here I put this downtrend angle on here. Support was here where the arrow is down, the point of that arrow, which we broke below, so we're in a bit of a downtrend. 1950 could have been the support level, but it hasn't been, so maybe 1900 could now be the support level. So we've had this up and down, even though that market is higher. We've had ups and downs throughout the year, and this is the tech heavy Nasdaq, as they call it. Again, we're in a downtrend. 450 should have been the support level because it was resistance here. Some are 4350 potentially support. Can't see it holding myself, but maybe it does. It was the top here, and it was the support levels along here. But this moving average is turned over again, pointing to the downside. So that's not looking good. This is all about risk and reward, and get the percentages in favor of you making money. Now, don't be disappointed at current market action or this year's market action, because if this is really a downtrend, we're in cash. And don't worry about being in cash and say, well, I get some return in the bank. Because when this bottoms out, if it is a downtrend, we'll reinvest. And that's when we'll make heaps of money after any downtrend, after any clearing out. So this is, behave yourself, this is Again, you know, there was a pretty significant update the day before yesterday, and we've had another down day. So the market's trying to make its mind up, but we've gone below this support level. Again, normally when you break to new highs like this, and even when you break to new highs like this, that means the selling is over and we've got a new uptrend. But it's not working at the moment. The market's still in a bit of a dilemma. Now, I just want to point out here, this is some of the great stocks that are undervalued with superior earnings growth. And last night, the only one that was up was Apple, but it was at the bottom of the day's range. So we have come out of Apple. I wouldn't really like to buy against the overall trend. I do love Apple. People know I loved Apple. But it's not about loving a stock. It's about where the trends are. So the trend isn't great. Facebook, here we go. We've still got it. It's still holding in there. Love the stock. But if it turns into a downtrend, I will exit. Obviously, I'm looking to buy these stocks back again because they're great looking stocks. But here, look, this is another great looking stock on a fundamental basis, United Rentals. But it broke a stop loss up here, and it is, you know, it's not looking good, is it? That is a significant downtrend. Jazz Pharmaceutical had a great pop yesterday. I thought, oh, 4.6%, not last night and the night before, 4.6% up. Well, it's down 2.93. It's trying to hang in a support level here. It's below that 160 level. On balance, looks more likely to go down than up. It is a fundamentally great stock. One of the great stocks. Celogen, which is this stock, which is holding up there just about, even better on the fundamental scale. But I wouldn't be buying right now because you're buying against the trend. And Gentherm, which was another great stock, again, you know, it was 55, it's 40 now. That to me is a 30% decline. Great fundamental stock, low P, very low P in relation to its earnings growth. So these are all on my watch list, but right now protection is the key. I just wanted you to say to you, if you're in any stocks or funds anywhere and you need some assistance, let me know, and I'll be glad to provide some assistance. This is the Asia X Japan exchange traded fund. This is what's been happening. Zoom. This is about 11% decline, and this is why I don't subscribe to buy and hold, because here we are, this is the end of 2012 and we're marginally below that now, and it's been reasonably volatile. So you need to follow trends, which is what I'm all about. If we were to look at, this is the developed markets index here, 83 to 58 in the last 3 months. This is deterioration going on in the market. Semiconductors still not looking great. Come off. This is from 110 to 95, 15% down. But all of these downs are profits for the future, because like what goes up must come down, what goes down will go up. Thailand, which I really like what's going on there. Back here in January when I was on the TV, I said, look, this is a buying opportunity. The index was going up when there was, you know, all the political shenanigans and army and whatever, and this was around 64 and it went to 85 and above. That is a 30% rise, but now we're in a downtrend, so it's gone from, well, virtually 86 and it's currently 81. So it's about a 7% decline. It's not looking great. So anybody out there who's got a portfolio, not with me, they want it reviewed, please send it in to Paul, P-A-C-E-O @richmondth.com, and I'll give you a free assessment. Anyway, this is the 10th of the 10th, 2004. Graham Bibby signing off for now, and you'll hear more from me soon. Have a great weekend.